Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash the like button, subscribe if you haven't, and just remember the little disclaimer nothing should be construed as financial investment advice. My thoughts, my opinions on the market. Let's get into today's stuff. Big things. I'll go over some news stuff, some data, and where I see the markets going. So anyway. Let's go in. Big thing, big news today. Look at this. Oh, Microsoft denies reports of lowering targets for AI sales growth. Uh, I saw a report earlier today that it's basically that the company lowered gross sales targets for artificial intelligence products after several sales staff missed their goals. Uh, but apparently Microsoft hasn't. This was the thing. Maybe they updated this article. Uh, Look at this. Surging tech valuations and signs of slow adoption of the nascent AI technology have fueled fears that recent months of a growing bubble are similar to that of the dot-com of the 90s. Now, I do think that's true, but uh, look at this. Only 5% of AI projects advance beyond the pilot stage. That's unreal. 5% advance beyond. I mean, I think AI is a bubble. I think it's more than a bubble. It's like if there was like a bubble, but with a sledgehammer attached to it, so when you pop, the sledgehammer starts coming down. I think that's what AI is. Look at this. Azure, whatever its name, US Azure sales unit set quotas for sales to lift consumer spending on Foundry, a tool used to build AI applications, by 50% in the last fiscal year, but less than a fifth met their target. So, company in July lowered their targets by 25%. AI is not the panacea. Uh, so, there you have it. Microsoft says it's a rumor, but AI sales not doing well. I mean, when people don't have jobs, why would they need it? Here's another thing. This really got me. This is December 3rd. US credit card rejection rates are surging at a concerning pace. So here it is. Rejection rates for credit cards, credit card limit increases, mortgages, auto loans, and other loans jumped over 25% in the last 12 months. The highest since the data's beginning. 2013 rate of surge 11 percentage points in 2019. See, this is the chart, and you see it, and it's just a little bit over 2014 of the rejection rates. So let's see, that was a paid advertisement. Rejection rates for auto loans reached 15%, second highest on record. Credit card rejection rates steady at 21. It's rarely been this tough to access credit in the US. Rejection rates signal less debt and slower consumer spending, especially for the bottom half. So there you go, rejection rates. So now access to credit. So that will mean declining sales. This I found interesting. This was actually on like a liberal podcast. There's like one podcast called Breaking Points. I don't endorse them and I don't really agree with a lot. But one thing they're really good at is they have this economies time where they talk about the economy. And it's really good because, I mean, the funny thing is, yeah, I have to be honest, we don't even get good propaganda in this country. It's really disgusting. You have this one side that wants to do anything it can to take down Trump. The best way to do it is just talk about the economy. I mean, that would sink his ratings. The economy's horrible. It's like they're given a layup, but they're so stupid. I mean, well, they believe what they believe, so they're so stupid that they can't even take him down. I mean, so anyway, but here's the new family of four poverty line, which I think it should be 140K for, I mean, if you're single, you can't live in major cities. You need a roommate. So I think 100K, I think 140K should probably just be the poverty line if you make less than that, especially if you're a family. If you have a kid, it should be like 160. But anyway, it was last set at 32,000, which is just not true. I mean, rent is so high that I think at least if you live in a major city, I think if you make less than 90K, you are in poverty. Because you're going to be in a bad neighborhood. You can't afford to live in a nice, so. But anyway, here's how it things. Childcare, 32,000. Housing, 23,000. Obviously, I'm not rounding. I'm just going using the number. The food and transportation, 14,000. You know what? I'm just gonna round it. Childcare, 33,000. Housing, 23,000. Food, 15,000. Transportation, 15. Healthcare, 11,000. Other essentials, 22K. 18,500 in income, in taxes. So, yeah, 140. So, yeah, I would say, yeah. So I really think the cost of living is, this isn't quite for, and transportation, I guess that's gas, but I wonder how much I spend on transportation. That's interesting. I work from home a lot, so I don't spend as much as most people. So here it is also BlackRock's Rick, I don't know his name, but they expect rate cuts in December. Think what you like, BlackRock. They want to cut rates. This is Yahoo Finance, by the way. So we can get into data today, but this is something I saw. US layoffs for October surged 2 decade high, Challenger data says. So you can see layoffs, they keep going. They're really going up. So America's labor market is cooling. Workers are quietly turning to Uber and DoorDash to fill the income gap. Um, America's mid labor market continues to cool, and the gig economy is quietly absorbing some of the employment strain being felt across the country. Platform-based gig work, which includes Uber and DoorDash, are holding up as traditional payroll. 20% of people lost pay, job, or had hours cuts turned to gig platforms to make up the difference. More signs of a shrinking labor market. Gig hours rose the most in cities where payroll growth slowed, saying that workers are taking on extra shifts to make up. What's happened? Like I had to take a pay cut at work, and I went to become a bartender at a winery to make up for income. I got a raise. I didn't really need to go back. So look at this shifts that's happening as broader labor markets crack begin to show. ADP that had a horrible jobs report. We'll get more into that. So you see, and Black Friday, everyone talks about how Americans are still spending. But as I said, all these spending numbers, they don't account for inflation. They just leave them as is. So data shows that consumers shopped at encouraging levels, but details about spending power suggest This may not be the boom that the administration believes. Look at this. Consumers spent 6.4 billion. Thanksgiving Day, 11.8 online, but both records highs and up significantly compared to last year. But Salesforce cited that found that order volume fell 1%, while average selling prices were up 7%. So as you can see, sorry, I turned off my phone. It's inflation. The revenue number is made up of inflation. So it's not because they're ordering more stuff. They're actually ordering less stuff, but the prices are going up so much. So there it is. People are buying less but spending more. Less for your money. And then Five Guys shut down across 7 states. So now Five Guys, look at this. Five Guys shuts down, 12 million inflation squeeze its franchise, which is premium burgers. So as you can see, job losses mount, and this is only a start. So look at this. So beef prices hit 1950 lows, cost spike. So I mean, I don't know if it is, but so anyway, you can see landlords absorbing the shock. So yeah, it's like what's going to happen to commercial real estate as all these restaurants start shutting down. And the other thing too is this is when investing, I would say, don't ever take anything for granted as fact. Explore everything because I was looking at generationals and they talk about the harder work ethic and everything. And if you actually look at studies and you look at it, I definitely believe this based on personal experience, but millennials became the hardest working generation. I mean, I definitely believe that because most millennials I know, including myself, all work two or almost all, not all, but almost all work 2 to 3 jobs, generally speaking. And one of them is their full-time corporate job. So boomers and Gen X never had to work like that. So yeah, I think it's easily they're the how this generation is anxious workaholics constantly on call. So there it is. So yeah, lunch at desk, emails, calls 24/7. Yeah, I'm not gonna lie, I eat my lunch at my desk. Uh, so there it is, all this study. So there it is. So let's go into the markets. If you look at stock market, even though all this is bad, the AI spending is what's really driving the market right now. And so as you see, the stock market's going up and up, and the Fed is cutting rates. So right now, the market, I think the stock market will go up to 7K probably. I will never. I will still say this: the days of investing are over. The big gains have already been made. That's why I don't really talk about the stock market. Gold, I think there's still some good gains to be made. Let's see where is Bitcoin. I think the big gains have already been made. This is over. As you can see, it's not at 100K. It's at 93K. Year to date, $226 only it's made. That's peanuts compared for a $93,000 asset. Uh, So let's go to gold. See if there's anything cool we can talk about. So gold, I want to go back, and this is why I'm saying don't ever buy into the correction fear mongering, meaning get out and try to get in. Because if you look at it, gold here, let's go like 6 month. If you look at it, it's coming here, and if you ask me, this looks like it's basing here and getting ready for one more move up. Right, it's year to date. See here, came here. That's a breakout. Just even 1 year, if you look at its 54, it's broken out. Just even on a 5 year, it's sort of one day. Who cares? Even on a 5 day, it just looks like it's sideways. 1 month, if you look at it, another high. And it looks like it's about to just break out again. So I don't know if this is a breakout or yet. I'm not a chartist and I'm not using technical analyst. I just sort of I listen to a technical analyst and I take into account what they say. Um, so I actually take them very seriously. A lot of people talk about correction, 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 and so far they've been wrong. I don't see silver at 45 or 44. Uh, I don't see 45 or 44. Uh, I would say most analysts really, besides Jordan Royburn, Jordan's been good. But besides him, I would say every other analyst, Avi Gilbert and all them, they've been wrong lately. Jordan's been pretty good, but even gold 1 day, that's 5 day. So it looks like, see, there's a bottom here, and it looks like it's sort of converging and it's looking to break out. 1 month, if you look at it, it's converged here, there's lows here. So I'm not a technical analyst, so don't take any of this as investment advice. These are just my opinions and thoughts out loud. So it sort of looks from this way, there's sort of looks bullish. So I always say my silver at 75, 80 is probably my thing. I'm slowly selling, so if it's 60 is when I'll probably dump some physical silver, and then 70, 75 I'll dump a lot. And I'll have a lot of trailing stops and everything. So anyway, that's all. I would say the only investable asset right now, in my opinion, that I'm buying is oil stocks. So just remember, nothing should be construed as financial investment advice. These are just my opinions, my thoughts on the markets. And that's all I have. I'll be doing more videos. And I'm not an uber bull. Funny thing is, I sound uber bull because all the analysts are like correction, correction, correction. When they say breakout, 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 then I'll be saying correction. David Morgan, all these other ones are saying corrections. I'm not saying this to criticize. I mean, David Morgan's Mr. Silver. He's like, he's legend. But I don't know anyone that's not calling for a silver correction. So that's why we're not getting one. Avi's calling for one, so that's why we're not getting one. Anyway, hit that like button, subscribe. Remember, not financial investment advice. I will see you next video.